Good morning, everybody, and all the apps into my computer. So if we run across something that ain't there today, we'll just have to get around it, I suppose. It'll be just the way that it is. It's jobs today. It's jobs week. Basically, everything right now is bad is good and good is bad. They're looking for anything that can tell them that the Fed doesn't have to be so aggressive, right? If the Fed has been, trying to perform demand destruction and cool off the economy, and just they want to see in a decrease in employment. They're never going to come out and say it that way, but that's what they want to see. So if the employment numbers are really good today, it's going to show that the Fed still has a long ways to go, right? And that they're not even close to that demand destruction that they're looking for. So that's one side of it. On the other side of it, if the numbers are really bad today, the employment numbers, then it's going to imply the Fed actually is accomplishing something. And that very likely could spike us to the upside. So be ready for that today. 8:30 is when all the fireworks is expected to hit the fan. And while 10 o'clock does have factory orders month over month, and that is an important metric, I don't think it's going to compare with whatever we get from the job numbers today. So that bias that we get is very likely going to be what sticks, right? If it's bullish from the job numbers, we're likely to stick bullish all day, and those factory orders is very much unlikely to change the game, or bearish, vice versa, right? Either way. Next week is a holiday. The market will be closed Monday. I will not be doing a morning briefing Monday. Yeah, the futures will be open, for a little bit, but it doesn't matter. I'm not going to do one. So just a heads up, I will not be doing a morning briefing on Monday. It's a holiday. As you can see, the volume is light today. They're really waiting for these numbers to come out, right? Compared to previous mornings this week, we're coming in, a little soft. It's squishy. We're also very, very muted, and that's something that is a little bit of a tell, right? Last night I seen people complaining that it was a really muted range and there just wasn't any follow through. That's usually a warning that there's something on deck, right? And even if you don't quite know what is on deck necessarily, it's just a heads up that maybe you ought to go take a look around and find out what's on deck. Well, of course, it was the job numbers. So really compressed, really muted. When those numbers come out, we're likely to get a whip in each direction. If you were to go to last month's payrolls, for an example, and look, there was a long wick on each side, and then it stuck, right? And then it started to run in a particular direction. So that'd be the idea here too. Don't try to trade the first spike, right? And then keep in mind Linreg kicks in. So we're very likely to regress back through. It's very much like a bungee jumper. They'll, reach the edges of that rope again and again, but at the end of the day, keep coming back to the middle. So we have no expectation of maintaining this micro range that we're in. The promise that the market makes here is still valid. The promise being We won't stay here. So let's game it out. We've got a market maker move of nearly 1%. We've got an ADR of 1.68%. So we just kind of put those two together and say, we'll call it 2.5%. I don't think I'm reaching too far there. Of course, we can do dollar values too. It's very close to $100, right? I got that new MX keyboard. And the darn thing is got this beautiful backlight to it, but the backlight doesn't stay on. It's supposed to be, quote, like user friendly, so it goes dark if you're not touching it. That's so freaking annoying. I love the keyboard though. It's absolutely amazing. Came with my new computer. Well, I got it the same day I got my new computer. It didn't come with it. All right, 103.29. So from the close, we'll just call it 104. No reason to haggle, right? That's our anticipated move, and it would be normal. That's the main takeaway. If we could move that much and it wouldn't even be extreme. That would just be another day at the park. Now, if we want to know what extreme looks like, we want to take that same number, cut it in half. I think it'd be faster just to draw another one. 50 points. $51 points, right? 52. This is how far we could move before they would start to say we're getting a little extreme. Pretty close to 3,800. And I mean, you know, you can put a little wiggle room in that. I think 30.11, the cog line, would probably be a pretty accurate spot. We're more likely to close on the center of gravity than we are the roundy. So that's one direction. And remember, that's not extreme. That's just where extreme would start. And then the same thing to the upside. You got 40.20. But very likely 40.11 would be, no, that's too deep. 40.25. So those are our ranges right there. The ADR half is the red lines. That's 39.34 and then 3,900, 38.65, and then down to 38.11. That would be the downside moves. Upside would be the 4,000 flat, 40.34, 40.71, and then up into 41.20-ish. So if things get extreme, they would start to become extreme on those edges. Not before that. And that doesn't mean that we're going to stop there. We could go well beyond that level. That would just be the start of it, right? So something to keep in mind when it comes to today's price action. Things could just get really nasty. And there's always the idea that when you have an overly heavy expectation that you get nothing, right? We've certainly seen that before. And we could just stay maintaining the range that we've been in since a few days ago back here. That would be Wednesday's Globex into Thursday. We could very easily just maintain this range if the data today is so muddy that they have to wait on the nerds to give them information. Then we might see a little bit of volatility to the edges, the high of Wednesday or the low of Thursday, while they wait for those nerds to give them the information that they need. And then we break out later in the morning and make a run. So that's always possible. I don't necessarily subscribe to that theory, but that theory is certainly on the table. To put this move into some perspective for today, that's about the size of the range that we're looking at. So as you can imagine, today is very likely to be a significant event. It's going to be the catalyst that either brings us back down into these previous levels or sends us back up to these previous levels over the next week. Now remember, as we come deeper into September, we've got CPI, PPI, and then we've got the FOMC. So September is going to begin to get rowdy, and we've been in the doldrums of summer. Low volume, lots of violence, because a low volume market is easily pushed around and bullied around by a couple of big players. We're still looking for that capital rotation to come into technology, because we've been getting out of energy, but we haven't seen that rotation into tech yet. And if that rotation into tech doesn't come, then the volatility is just going to continue to pick up, right? Because then it shows that we're not picking up that other side. Now, since it's Friday, we also have the capacity or the opportunity to see that weekly expected move. It's nice to have all my drawings and everything, even on the new PC. All right, so we can see next week's is there, right? And one of the first things I do when we get the new box, even though that box isn't locked yet, I like to draw a box through what we already had and then grab that thing and put it on the new week and see how much more volatility they're pricing in. And as you can see, next week has a greater volatility priced into it than the current week, right? They're expecting more next week, which is, it's not unusual, right? It's not a big deal. It's just always something that I look at. Now that thing's going to continue to move through the day, and then after the market closes at 4:15, it'll lock into place, and that'll be it for the week. With this deep drawback that we've had, the Linreg is back in play. I don't have my drawing tools loaded yet, so I'll have to do it this way. That swing low, high, low, muted with a lower low, higher high. Now, the thing about these swings, generally speaking, if you get a 3% here, you'll get a 3% here, right? Or, you know, a 4% here, you'll get a 4% here. Now, a lot of people called this run up off of the July lows nothing more than a bear market rally, that we were just pulling back yet again, and that we were not done yet. And if you look back at something like, say, Y2K or the 07-08 housing crisis, there is an argument to be made in that regard, right? If you have a market that's just been going up forever and it finally starts to go down, when it's doing these pullbacks, each pullback is likely to be bigger and more aggressive than the previous pullback. And so are the next drawdown, right? And that's what it shows throughout history. That's where the term comes from, bear market rallies. Each consecutive one that you get tends to be bigger and stronger and last longer than the previous one. And that's certainly been playing out in 2022, right? These rallies up. But those rallies up here and here, that was FOMC March 16. That was FOMC May. That was CPI right there. So, you know, every one of these was event driven, and every one of these was the catalyst that sent us up into the next leg or down again. Because this downward move, of course, was Jackson Hole. I did end up getting all my charts on the new machine, but I have to put all the charts in. That'll get us close. Yeah, that'll do it. All right, 10-day, 30-minute. We're outside the box. Significant level of resistance over our head at the value area low, which would put us around 39.81. If we get through that at the roundy at 4,000, it gets shallow again until we get into some resistance right around the 40.40 area. Now we've got a zone marked around that 40.60, which is actually on the back side of that volume. That's why it's useful to come in and look at that volume profile. When we measured out our levels, it was based on ADR and market maker move. Now we can take that and bring it into perspective with the volume and see, is it still on the table? Is it likely that we can get there? And it is, but it would be a tremendous fight to be able to get through this volume level. Now, if we do get through that 40-60 zone, it gets shallow again, which means we could move through that really quick. And then that lines us up at 41.20 with some previous price action as well and a large amount of volume. So even if we were to top out across that 41.20 zone, the volume above that would shut anything down. And if you're looking at that thinking, there's no way, it's just too far away. Hey, I didn't make this, right? All I did is measure it. It's not my bias. And I've learned, certainly long enough, the price can do whatever the heck it wants. And it can get as extreme as it wants. All right, so we do have an untouched point of control at 4,200, but that's way above our levels. And I don't think that's on the table today. As much as we say price can do whatever it wants, the ES or the S&P in general, it has a history of how often it can make something like a 3% move, let alone a 4% move. And a 4% move gets us up to that red bar that I drew. You start getting all the way up to the 4,200, now you're talking a 5.6%. That's very close to triggering lock limits. And of course, we know that we can trigger lock limits. That's why they have them. But that would be a rare event to trigger a lock limit due to some economic event. So theoretically, it's possible, but I just don't anticipate it. Keep the level marked, right? Because eventually, someday, we will go back up there, carry that line forward. All right, so that's our anticipation for the day. It's all going to be about the econ this morning. Now, a couple of things of note. The dollar did fade off a little bit. Yay! It managed to get really close to 110 yesterday. And there's people that continue to say that it ain't done yet. Bonds have remained muted, still maintaining its level near that VWAP, but not much other than that, which makes sense, right? They're not going to pile into bonds or stock until they get the information. Same thing with Bitcoin. Gold's actually been bid up all morning, but I wouldn't look too deep into that. Energy had a nice move last night, but it's giving a lot of it back. Linear regression in play. Notice it's just maintaining inside of yesterday's range. It got really close to the previous day's high, and then we had that 2-bar reversal or that tweezer top reversal. And the focus with the VIX is that's nothing, right? There's nothing there to see because the market hasn't done anything all night. As soon as we get this report, even if the market starts to go up, I'm going to still be expecting that VIX to go up, in the short term at least. A lot of times when a market gets too far away from its 20, for an example, you'll start to see price going up and the VIX going up at the same time because more and more traders will start to realize, hey, we're getting too far from that 20, and they buy more puts. And the more puts they buy, then the more the volatility picks up. Speaking of put buying, if you listen to some of the smartest minds out there right now, they're saying that the market is drastically underhedged, which means there won't be any short covering rally like we got in mid-June or mid-July when that massive fire hose of volume turned on and the market just exploded to the upside. There's not enough short coverings out there right now to cause such a catalyst to back up. That it would be new trades, not shorts getting squeezed, and something to consider. All right, so this game theory that we did here, marking out these high levels, these critical zones, taking it to the edges of the measurement, you can do exactly the same thing in some of your best equity names, right? Kind of go out and think about the monsters of tech first, of course, right? Because they're the sexy ones that everybody focuses on. But it doesn't just have to be those. That would just be a good place to start. If we were to get bullish today, where does that put Apple, for an example? So Apple's got a $3 ADR. And right now it's got a market maker move of another $1.75. That's $4.75. And that wouldn't even be considered extreme. A $4 move, $4.50 move in Apple from the close. It closed at 58. You're talking about 62. That's up at the top of the range. What would a butterfly in Apple at the top of the range cost? A $4 out of the money butterfly. I bet it'd be pennies, right? Fill a butterfly for like 2 cents. So if we get bullish this morning, the job numbers come in, it's all crazy, it's a rip to the upside. Maybe buy a 2-penny butterfly. That thing would probably have a 400% payout probability. And what if you're wrong and it doesn't get there? So you lose 2 pennies. So what? It's $2. Let's see what's moving around this morning. I don't expect anything to be really moving. That's why we're not trying to like run scans and see what's moving. Everything's on hold, right? Everything's holding its breath for this big move. The big move is going to be one way or the other. That's what you really want to try to game out. Like Facebook has been really strong this week. Communication names mainly, but I mean, Facebook held up when everything else was getting gut punched. If we get bullish today, where's this thing going? We're above the weekly pivot. We've got a 3% ADR, so a $5 expected move with another 2.7 that you can add to that. So you're looking at like a $7 move in Facebook. That'd be around $70 to $72. That's back up to the top of this range. So go in and look at your favorite names, right? Maybe stuff you're already holding, stuff you want to hold, things that have really great options. And really kind of hone in on the idea that if today is bullish, we're very likely going to see the catalyst that we've been looking for because we've been rotating out of energy, but not into tech yet. So if we get bullish today, it'll be a rotation into tech and probably into finance. Although I don't want to say it will be finance because that move in the bonds and in the dollar has just been nuts, right? So I think tech would be the one that gets the most of the flow. Now, if it's bearish, on the other hand, if we go down instead of up, tech is going to get the beat down of its life. And there probably won't be any sector that does good. Not even energy. It'll be that kind of day. We'll be looking for a very high correlation coefficient. So what that means is you go to Market Watch, drop down to Visualize tab. This won't help for that, right? You got to get out of this. So up at the top, you go to Index Watch, pick your index. These are detachable, by the way. So you can pick, well, detach it first and then pick something like the S&P 100 and then detach another one and go in and pick the NASDAQ 100. A high correlation coefficient says that we're going to be looking for 97, 98, 99 names all doing the same thing. And significant 5 to 1, 7 to 1, 9 to 1 money flow. All right, so like for every dollar coming in, 9 are going out or vice versa. The put call ratio on the intraday like this, I don't hold any weight or value to it. And I mean, volume, I'll look at it, but the volumes don't get me either. It's just where's the money going and how many issues are moving in that direction. This is an advanced decline line, right? It's just like looking at the advanced decline charts over here, only with much, much more detail. It's got the money involved in it. It's just a really detailed view of this. If we get a high correlation coefficient, it's going to peg out, max out. So you can see how there's edges to this. We get around 1 on each side, and it just stops. That's it. And that's because it's the NASDAQ 100. There's only 100 names. You're not going to go beyond that. But you can see days where it was really extreme, that it got down there, and that was it. There was nowhere else to go. That thing was foot to the floor. That's a high correlation coefficient. Whereas you get a day, say like yesterday, two-sided trading, we kept giving it back, taking it, giving it back, taking it, giving it back until we finally crossed that zero line. We got a couple of really good names that are priming for a significant trendline breakover. You could try to time that in with something like a MACD cross up. I'm on an hourly. Right, primary and secondary trend both bullish. Of course, what we're going to be looking for is something that hasn't yet crossed over, right? Maybe its secondary trend is bullish, but its primary trend is bearish, so we're still looking for that crossover. Tie that in with a trend line break. Disney looks really good for that. All right, we'll come back to Gilead for a moment. This thing had a significant move yesterday, right? Just a massive rip. And it was doing it all day long when a lot of the rest of the market wasn't doing this. If we're going to see a rotation today, say tech up, energy down, or energy continuing to go down, this is very likely not going to continue that run from yesterday. It was doing the opposite of the market. Watch for it to do the opposite of the market today. After such a big move that it had yesterday, that could be a nice run right back down to 63 for an example, right? So at the start of the day, everything negative, if you can get like a credit spread up there for a 0 day, just for an example, you know, and it just spends the rest of the day falling into the dirt. Yeah, great. That's a nice credit spread going into the weekend. It's 0 day. You'd be out of it by the end of the day anyways. And it's got a history of making those big moves and then dumps. So back here too, for an example, right? Except that this wasn't a Marbozu like that and that. So, you know, a little bit of caution, sure, but that's what I'd be looking for. If it ran opposite of what the market did yesterday, expect it to do opposite of the market again today. Retail, for an example, like Target. All right, guys. Hopefully I give you something to think about. Um, enjoy your 3-day weekend. Be careful if you are going to try to trade on Monday in the futures market. It's not worth it personally, but I get it. A lot of people want to trade anyways. And otherwise, we'll see you guys next week.